Hey guys, welcome back to my YouTube channel. I know that it's been a year ever since I posted a video on my channel. It's been ages actually. So from now on, I'll be posting my videos once a week to ensure that I increase my engagement and ensure that I give you guys the best educational content this year. Okay, so I'm back. Make sure that you subscribe. Make sure that you turn on the notifications so I can be alerted on the next videos that I'll be posting from now on. Okay, so today's video is going to be on candle range theory, which is CRT. This is a concept that's been trending for the past few weeks or months. Okay, so let's get started. Candle range theory, the basic idea behind it is that every candle, it's a range. Okay, now what is a range? A range is a defined high or low. All right. This is depicted in the accumulation candle. As depicted in the picture on this video. Okay, so this is the accumulation. All right, so every candle has a defined high and low, and this can be defined through the lens of open high low close or open low high close. All right. So as I've mentioned that our first candle has to be an accumulation phase. Okay, so the CRT mainly focuses on a 3 candle pattern, which was taught by ICT in the high probability scalping series. If you remember one of those videos that he made available to the public. Okay, so the first candle is treated as the accumulation phase. The second candle is treated as the manipulation phase, and the third one is treated as our distribution phase. Okay, so the accumulation phase, it's more of a liquidity buildup. So we're going to treat it as our liquidity buildup before we even look for trading opportunities. Okay, so you have to align the whole concept with a higher time frame bias or to go with the trend. Okay, so you are going to use either the order blocks, you're going to use your liquidity rates on higher time frames, you're going to use breakup blocks, supply and demand, support and resistance. Those are going to be your go-to point of interest when you're looking for trade setups. Okay, so the manipulation phase is going to actually tap into any higher time frame point of interest. It can either be your FEG, it can either be your order block, it can either be your supply and demand. Whatever that you have marked on your higher time frame, you're going to wait for the manipulation phase to trigger into that before you look for a setups. Okay, so the third candle, which is going to be the distribution, that is where we are going to get involved. We're going to be looking for our trade setups. Okay, what we are going to be looking for specifically is a pattern, which is the open, high, low, close. Okay, or the open, low, high, close, depending on whether you'll be buying or selling on that particular day. All right, so the opening has to be midnight New York time. Okay, the high has to be created between London, at London time zone actually. Then the distribution will occur at either late London time or at New York Q zone. Okay. Okay, so we are going to combine the knowledge that we have just learned on the previous slides, which is combining everything together with the OHLC and the ONHC, the open high low close and the open low high close. Okay, so the idea behind this concept is to sell or buy on the distribution candle, which is the third candle. Okay, so the high probability CRT occurs after price mitigates a higher time frame point of interest. Now remember that price can mitigate a higher time frame point of interest with the accumulation phase or on the manipulation phase, which is the second candle. Okay, so we are going to combine that with OHLC and the ONHC. Okay, so usually I use the daily time frame to trade this concept, but you can use it on any time frame. And with reference to aligning it with your higher time frame bias. Okay, so with the higher time frame, I use the day. For my entries, I use the 15-minute or the 5-minute. Okay, so what I do is the moment the price takes out the accumulation high or low, I mark my midnight open, New York time. Then I wait for a manipulation phase to occur. After that, then I would wait for my market structure shift. Then I would look for fair value gaps in the creator weights. And from there, I would just wait for a pullback into either a breakup block or FEG. Then my stop loss will be placed above the recent high or the high of the manipulation. Okay, so I'll show you examples, live examples of some of the trades that I've taken in the past 2 weeks, I believe. I think I took 2 trades, which is on GbpUsd. Okay, so stay tuned. I'll give you guys the examples on the next slide. All right. Okay, guys. The first example I'm going to give is on GbpUsd. This is a trade that I actually took on my evaluation account with GoFunded Trader. One thing that I can tell you about GoFunded Trader is that they do not deny payouts. They also give you payout on demand within 24 hours or 48 hours after you made your first profit on your funded account, which is phase 3. Okay, so let's get started. I'll leave the description, the link on description, so you can check them out and decide on your own whether you want to trade with them or not. Okay, so as you can see on the daily time frame on GbpUsd, we have been trending up, which means that we have identified our bias as bullish. Okay, and price has mitigated multiple point of interest, which is the 4-hour breakup log and the 4-hour demand zone. Okay, so this candle that we have to identify is the accumulation phase, which is this candle right here, as indicated by the black arrow. Okay, so first thing first, we're going to mark the high of the candle, which is going to be our candle range high. Okay, let me just hide this down, which is going to be our CRH candle range high. Okay, then we mark our candle range low, right? Okay, so candle range low, the bottom, right? So now we wait for our candle range low to be taken out by the second candle. Okay, then we can then drop to our 15-minute time frame to be looking for our entries. Okay, so let's see what happens. We have that candle range low taken out, and now we are having a manipulation phase, which is the second candle right here. Okay, so as I've mentioned, that we can only take our trades on the distribution phase, right, which is the fat candle that is going to appear right after this one. Okay. Only if you're using the daily time frame. Okay. I'm going to drop another video using the 4-hour time frame to show you how you can get entries from there. And also, please make sure that you subscribe and turn on the notifications for future videos. Okay. So the second candle just appeared. We took out the low of the candle range, and we have further manipulated to the downside. All right. So we are going to drop to the lower time frame. Before I do drop to the lower time frame, I just want to show you this 4-hour chart and the point of interest that the market has manipulated. Okay. Let me just move this right here. Okay. So price hasn't taken the knowledge low. Okay, there we go. Okay, then. Now, as you can see, the candle range noise has been taken out. Now we need to go to the 15-minute to look for our entries. Let me just see. Now, I think price has actually
price has left our entry point. Our entry is supposed to be somewhere around here because this is where I entered. Let me just take price back. Okay, so as you all can see that we have our low formed here. This is the manipulation low on the daily time frame. Okay, so this trade, it's a high risk trade because we are not actually waiting. We didn't actually wait for the distribution candle on the daily time frame to appear. However, I will show you an example on that distribution candle after this example on the trade that I took. Okay, so price has been making lower lows, lower highs, lower lows, and lower highs. Okay, and after that, price did what? Manipulated the candle range low, and we had an impulse move to the upside, which has given us a change of character or a market structure shift, as you all may define it or label it as. Okay, where is it not opening up? It's up. Okay, we have a market structure shift. I'm gonna take it to the top. Market structure shift identified. Now we have to mark our midnight open, which is this candle right here. Just gonna mark it for you and label it as midnight open NY New York time. Okay, so now that we have our market structure shift, we have our midnight open marked. We need to identify a liquidity sweep on the lower time frame. We have equal lows right here. Equal lows means liquidity. Now we need to identify our point of interest, which we are going to use to enter our trades. Okay, as you can see right here, we have the first candle, the second one, which is an impulsive move to the upside. Then we have the third candle. After that third candle, we have an opening between these two candles right here. This is our fair value gap. Okay, this is our fair value gap, our FEG. This is where we are going to constitute our entry. We are going to take our entry from right there. Trade set, stop loss below the manipulation candle. Okay, usually I target the next point of interest on the 15-minute. Okay, which is going to be this right here, which is going to be our supply zone right here, or you can just say an order block. This is my next target, and if it doesn't give me the overall RR that I usually want, I'll just mark this as my next target. This is internal buy stops. Internal buy stops. Internal buy stops to the top. Okay, so that is what I will be targeting. Okay, now we place our order using our let me just click this, then place order right here. So this software can actually help you guys improve your trading strategies by just using it to, okay, going to place my order at 126,978. Take profit, it's 1.27522. Then my stop loss will be 1.2626802. Okay, and then I place my order right here. Okay, limit set. Now we are going to play price and see what happens. Now as you can see, price has mitigated our entry, and now we have a move to the upside. Okay, just let it play out. And this trade was taken during London kill zone, guys. Okay, let's see what happens. Price is slowly moving. Okay, as you can see right here, we are at the end of the day, of the trading day. Our TP hasn't been hit yet. However, this is where I think I closed my positions somewhere around here. I will show you guys the proof of execution at the end of the video. So this is why I think I closed around here, because price wasn't actually showing any signs of going to the upside. So out of fear, I actually closed. So I'm going to show you the second example. All right, so stay tuned. Okay guys, so the second example is on taking a trade on the third candle, which is the distribution candle on the daily time frame, right? So let me just play price so that the daily candle can show up. Okay, right here. So you can see that this long wick down here, it's a manipulation and a mitigation on some point of interest inside this daily candle. Okay, so I'm going to mark this opening of this price, okay, because we still have to take out this candle range high right here. So I marked this as the but the open daily. Okay, so open daily. Okay, no problem. So from here I'm going to drop to the 15-minute so I can show you the example of the trade. Okay, we are right here. So this is the opening, right? Okay, let's see. So from here I'm going to identify our point of interest that I think price will eventually mitigate before giving us a change of character or any possible moves to enter our trade setups. And we have this low here which can act as internal sell stops, liquidity. Okay, internal sell stops, bottom, right? So now we just have to wait for the midnight open, New York time, and see what happens. Okay, now let's mark the midnight open. We have the midnight open right here. And Y. Okay. Right, so let's wait for a manipulation to the downside and a change of character. So as you can see, price came down. Oh, sorry about that. Price came down, took all, or actually activated all these sell stops below this low, and took out the stop losses of all those that are buying from this zone that I've just marked. Okay, so meaning that we are going to treat this zone as a trap, as a smart money trap, SMT. Okay, so now all we have to do is wait for price to give us a change of character or a market structure shift, however you describe it. Okay, we have price respecting this fair value gap right here, which is a good sign. However, we don't have a market structure shift yet, we just have a wick. Okay, so fair value gap respected. We need to see that market structure shift. We have one right here with the body closure of this candle. So I'm going to mark that as my market structure shift top. So my entry will be at this fair value gap right here. Okay, I'll put my stop loss at the manipulation low for safety, and my target will be the candle range high here. Okay, let me play price and see what happens. Okay, there we go. So we are going to add our order again on this trade. Let me just place my order right here. I'm going to risk 0.5% and place my order right there, and that's it. Now we can see an impulsive move immediately after price mitigated the FEG, went further down to take out this low of the first encounter with the first FEG. Okay, so let's see what happens. Now this internal buy stops here have not been taken out yet. However, we have created a small mitigation. Now let's see how price behaves after that. price came back to entry. Okay. Back to entry again. Okay, meaning that the second trade that you would have taken would have been at break even, right? Even though I didn't move my stop loss right here on this platform. However, you know that the moment you enter a trade and you get a break of structure like right here, you can either move your stop loss to break even or take partials. And at this point of reference, when price takes out this internal buy stops or any internal liquidity, you can move your stop loss to break even and also take partials from here. This is a lesson that everybody should take into consideration. Okay, so I've shown you guys the examples of trading the CRT, the candle range theory. However, price didn't take out the candle range high on this particular day or on this week. Okay, however, I did show you the examples on how you can trade it, how you can get your precise entries using time and price, using your knowledge. Now use this knowledge to backtest your strategy, and also make sure that you check out the software that I'm currently using, which is my trading journey. Now this software, with this software you can journal your trades, you can backtest your strategy, improve your strategy with it. Okay, so as you can see right here, it's showing me the trades that I took. The first trade that I took, it says that I managed to get $772, and the second one, which resulted in a loss of $250, which is 0.50% risk of a 50k account. Okay, let me just go back and show you guys exactly how it looks. So we have a dashboard right here, and there's also a 50% off currently running, which you can use to your advantage. Now with this software, you can backtest an automated trading journal only when you add your account. Is either your MT4 account or MT5. You can add it right here at this option, so that the software can analyze your trading account and give you your daily journal, your trading log, your reports, and all that. So make sure that you guys check it out. Okay, it also has sessions. It tells you on how many sessions, how many trades you took on a particular session, and also how many percent of profit have you made from that, and also the win rate of that current or of that particular trading session. Okay, as you can see here, it says that on London I made 9.58% with a win rate of 25%. At New York I made 30% win rate, 10 trades. However, the profit on at New York wasn't that much. It's actually a negative. Asia also a negative, 0 win rate. Outside sessions, it's 0, nothing. I haven't taken like any trades. At Asia I took 1 trade. New York I took 10. London I took 20. So actually this tells you that I have more trades on London. I have more trading opportunities at London, which means that I have to actually focus on trading London session. Okay. It also shows you your best win, which on my account was 8,258. My average win is 2,000. Worst loss was 1,938. Average loss, so on and so forth. Okay, so check them out. I'll leave you guys the descriptions on the actually the link to open your account with this software. Okay, so thank you guys for watching. Make sure that you subscribe for future videos and also turn on the notifications so that you can get alerts for whenever I drop you guys a video. Thank you very much for watching.